Hello guys, good morning. Today is August 31st or 30th. Pretty sure that it's, 31st, Wednesday. I'm going to be talking a little bit about today's price action, and as you can see, I'm recording pretty early, around 11 a.m. New York. And that's because, in my opinion, we've already had everything that I would find interesting to talk about today's price action. And what happened today was actually quite cool. Not gonna lie, I didn't trade my best today, and if I was trading on a Challenger funded account today, I would have taken one loss and would have missed out on one buy. Although, as we'll discuss now, you'll see that from my point of view, I could have not taken any of the buys that actually showed up or worked out, better said. So, and there was only one buy that we could have taken advantage of, but ends up failing, being used as liquidity to then just continue higher, which is, well, we'll get into the details on that one in a couple of minutes. So, let's do this. This is midnight. This is London, and this is pre-New York. So, what do we have through midnight? Midnight started going higher. As you can see, it sweeps couple of highs, right? Because everything from this point and lower is taken as liquidity. So this couple of highs, this couple of highs, this high, and pretty much everything that is in the middle, of course. After that, what does happen? Price starts going aggressively lower, have a market shift in the 5-minute, we have fair value gaps, price just continues to create fair value gaps and respect them. As you can see, London does continue to do that. We also have this little bit of a Judah swing around the middle, or a little bit more towards the end of London, that takes a couple of equal highs in the lower time frames, and then just continues with the trend quite aggressively. Now, what we have here is what was created through Monday and Tuesday, which, looking at it now and understanding what just happened and what could continue to happen, and at the same time, well, not at the same time, basically what happened today makes us understand why Monday and Tuesday were as they were, and why these levels were just continuously respected over and over, right? We have 1, 2, 3, and 4 mitigations that price just completely respected. And of course, the more mitigations that there are, the more liquidity that is going to be created. Therefore, the more the impulse after taking that liquidity could be, right? The more the impulse, the larger the impulse could be. So London, of course, we have some pretty good confluences to believe that London was going to be bearish due to midnight, due to what happens through London. Even this little bit of a Judah swing would have been a pretty nice opportunity to try and trade. And as you can see, price goes very aggressively down to what? The liquidity pool that we just discussed. I'm saying liquidity pool, I don't really know the concept of liquidity pool, but I'm saying that as there's a lot of liquidity below these lows, I'm calling it a pool because there's enough to consider it as a lot of liquidity, right? So after that, what is it that we get through pre-New York? Pre-New York, as usually, it basically just ranged, right? But what is interesting about pre-New York today is that when it ranged, it kind of created a little bit of sell side with this couple of lows, right? Because we have the low at this level and then the low at that level, which is pretty much equal low, relatively equal lows. And after that, you can see how price ranges a little bit and then aggressively starts going higher. At that point, when this high is broken, we have a 15-minute market shift, 15-minute fair value gap here and around here, if I remember correctly, that is mitigated with this first move. And here's the thing, if we go to the 15-minute, we'll understand it a bit better. We have run on sell side, of course, along with what we had to the left is run on sell side, starts going aggressively higher. We have one fair value gap here, we have another fair value gap here, and we also have this couple of candles, which, as ICT has kind of explained, could be considered an order block, as he didn't explain the exact way that the order blocks work based on, of course, what he believes, or based on his teachings, right? This entire thing could be an order block, but as he hasn't explained it completely, we can't really say for sure if it is or if it isn't. But as it is a couple of consecutive candles going lower that then just completely change, in my opinion, this could be considered an order block. As you can see, price mitigates it here quite lovely, and then you can see the impulse higher. At the same time, we have the 50-minute order fair value gap, right? That is also mitigated on that move lower. So today was a little bit complicated for me because, of course, what is it that we're seeing? We're seeing that price has been bearish, has been quite aggressively bearish. This could be considerably a Judas swing. Just even at the beginning of the day, I said through the Telegram, I love to see phase one going against the trend, right? Because in my opinion, at this point, it was just a Judas swing. The price could now look to go lower, right? So some buy side liquidity, all of these highs, mitigating some fair value gaps from London. That price could now continue to go lower, right? Using the liquidity to just cause a tiny bit of a retracement to then continue lower. So for me, that's what I was thinking on, right? That's what I was thinking on. So my mistake today was not understanding how important this liquidity pool was. Now, of course, even though I was expecting price to probably continue bearishly, I was not ignoring the buys entirely, but there were no points where I could have actually bought, right? So we have 50-minute fair value gap, 50-minute order block. Of course, we could say, okay, so why not buy on this, on the fair value gap, the stop loss all the way down to this low. Could have been a nice buy, talking about peak at around 5.75, but that's not the way that I trade. I trade with a higher time frame fair value gap that then turns into a lower time frame fair value gap and market shift and everything to try and take advantage of that move, right? So today, that's kind of what we didn't have, but we'll get into that now. So we have this move, and what I really liked about this as well is that this is the open. As you can see, using the power of 3, we have the manipulation and then the distribution higher. So this was pretty much making people believe that we were going to be bearish and just completely changes the direction immediately after. Well, in the meantime, of course, takes sell side liquidity, mitigates an order block in the 50-minute, 5-minute as well, and the 50-minute fair value gap. Right, and of course, all of this happening within the New York kill zone. So we have the power of 3, we have liquidity, we have order block, fair value gap, and of course, all of this for liquidity that we have to the left, and well, 50-minute market shift. But of course, if we have a fair value gap, supposedly we should have that market shift as well. So this impulse happens up until this point, up until this high is broken. I can't really consider this as something that I would trade, right? As I've mentioned a couple of times, I need when a 5-minute or a 50-minute fair value gap is created, I need that fair value gap to have caused a market shift or something close to that, right? So we hadn't gotten that until we break this high, which could have been a bearish scenario as we're sweeping sell side, mitigating order block up there, and potentially going lower, which is where it would have taken my loss today, right? But we'll get into the sells in a second. As you can see, mitigates that. And this is the point where I will look for the buy. Right, this is the point where I would say, okay, so we had sell side run, 5-minute fair value gap, and of course the market shift. Now let's go for lower time frame opportunity. And as you can see, price creates this pretty aggressive move lower that sweeps liquidity from this low and this low, aggressively higher. We have the market shift up here, or just with this candle, and then the creation of the fair value gap. This is what would have been my entry. Place the entry, well, actually didn't place the entry. I was waiting for it to trade back into it, or then to trade back into this one to mitigate to market execute the entry. And as you can see, price starts going aggressively higher, and that's when I decided that I was not interested in this. The entries that I've taken in the past few months with this methodology or strategy are mitigated almost immediately, right? It's like the entries that I'm used to, price in this candle would have just gone down to this, mitigate that, and then continues higher, right? Or maybe it just ranges a little bit to then continue higher, right? Today that didn't happen, and we'll see that twice if I remember correctly. So for me, waiting for this to come back down all the way down to this one is not something that I would have liked to see. Reason why I ended up taking out the entry. As you can see, it works out quite well. Then we have price mitigating this, which if I remember correctly, yeah, it also does create like a 5-minute fair value gap around there. Mitigates that. We have a little bit of a range. Sweep on sell side liquidity, creation of a fair value gap in here. Price does not trade into it, and even if we would have tried to buy from here, that would have not happened either, right? So for me, those were the two buys where I would have been interested in buying, and it just didn't work out. And maybe even we could have bought from here, right? Because it is already after the open and everything. But as you can see, again, fair value gap, potential market shift with this little bit of a high there, or just a market shift here. As you can see, price doesn't mitigate it immediately, or at least maybe this happened and then it retraced to continue higher. That could have been a potential entry, but for me, when price has pulled away as this, I would have not gone for this anymore, right? Maybe could have waited a couple of minutes, but those couple of minutes just ranges and then continues higher, right? So the three opportunities where we could have bought with this, which is with this, and this fair value gaps, 2 5-minute fair value gaps and 1 50-minute fair value gaps, are just interests that would have not worked out for me due to the way that they were executed. This one could have been done. Could have been done because price doesn't pull away too much and it does come back down slowly. But again, it's not something that I'm comfortable with, but maybe something that I should check out just in case I'm making a little bit of a mistake on this. Yeah, just wanted to mention that on this. Sell wise, the reason why I wanted to sell and why I sold, of course, demo. This entire week is going to be demo. I'm coming back to challenge and fund it next week. Is with this. Have a 5-minute fair value gap that is mitigated, and the market shift, in my opinion, happens here, which I do still believe that is a market shift and that this is a potentially good opportunity. The problem with this sell is that, sure, we are taking buy-side liquidity, but look at how we've been going. Higher high, higher low, taking some liquidity. Of course, we could say higher high, higher low, higher high, higher low, higher high, lower low, potential lower high, but this ended up just being a Judah swing, right? And we have this, so we are pretty much we're pretty much retracing this move, which doesn't entirely mean that this could continue to go lower from here. It could definitely reverse and everything, but we are in such a bullish scenario with all of the sell side that was taken, this sell side in here, the sell side in here, and everything, that it is a little bit difficult to expect price to actually go lower from this point, right? This was my mistake today. And the entry does look somewhat good. As you can see, price reacts to the fair value gap, goes lower. This is the 5-minute market shift, comes back up. This is where I wanted to sell from at the beginning, then this, and this is where what I ended up choosing. This is an entry that I would have taken on a challenge or a funded account, which would have ended up in a loss, as you can see. And this is the only entry that I would have wanted to take today, and at the same time, the only entry that I could have actually taken on today's price action, because repeating myself here, but in here, I want to see my entry be mitigated immediately, not impulsing and then retracing back into it. So that would have been a miss for me. This, of course, as you can see, even if I would have gone for this and kept the entry, would have not been mitigated, but I would have not kept the entry past this point, in my opinion, or maybe probably not even after that point. And this would have been a pretty high stop loss, which now that we've seen the impulse that it has caused, it looks like it's a tiny stop loss, right? But in the moment, you don't really expect this is what would have been my target pretty likely. So yeah, not even probably a 1 to a 2, 1 to a 3 that I could have gotten with that entry. So again, not something that that would have been feasible for me. And before that, we actually don't have anything. So yeah, I mean, it is what it is. The loss that we could have taken on the buys as well is this 5-minute fair value gap around this area, and as you can see, this mitigates it. 1 minute market shift and 1 minute fair value gap. This is a buy that I mentioned through the Telegram channel that I could take, and it's something that I would have not traded on a funded scenario because it's pretty high up, right? I don't think we are on discount at that point. No, we're pretty close to it, but as you can see, it doesn't mitigate discount, so that also does help as well to avoid an entry as high as this one, right? It's not really high, but it's definitely higher than we would like to see, and we have much better fair value gaps lower than that. So this would have been a lovely day to take advantage of. We have London high as an aggressive target, which would have worked out well, 6.77. This would have been a 3.8, so pretty close to 4 hours, so I would have been fine with it. And then we have the really aggressively target, which would have been previous week's high, right? That's something that we could be targeting today due to the impulse that we're seeing, but honestly, it's not something that I would have risked my money onto. I would have taken Probably profits here 3.86 are in as far as London, right? Would have not gone further than that. So today and so far this week would have been an interesting case due to the liquidity, due to how Monday and Tuesday created liquidity for Wednesday to take, creating potentially the low of the week. Well, actually, the low of the week is, yeah, no, it's down there, but potentially a pretty intermediate to long-term low here to cause a pretty high continuation, or pretty aggressive continuation higher, just following with what we've been seeing. Let's actually go to the 4-hour with what we've been seeing on this, right, which is just price changing direction and continuing bullishly, which, as I've mentioned a couple of times, I'm kind of thinking that all of this is just a pretty big retracement to this, right, to this entire move, because price hasn't really mitigated that much, hasn't really retraced that much, right? And we're pretty far from the 50% still on this entire move. So we could see price just retracing on the 50, around the 50, to then continue higher, lower, or maybe a reversal. And as I did mention last night, actually, did something I hadn't done in quite a bit. And was check the DXY. And I went to the daily chart. And as you can see, we had a clear run on buy side liquidity with this. So price could go lower to at least take this low as sell side liquidity, maybe then just continue higher, or maybe cause a pretty big retracement from this point, maybe down to something like this, or a fair value gap in the 50%, which could be, well, this one could be lower, right? And so as we could expect the XY to go lower, I guess we could expect the euro dollar to go higher, right? As the XY is the strength of the US dollar, basically. And I made that analysis last night just to see if we could get some, like, a little bit of an extra confidence, because I was a little bit confused about what could happen. I wasn't sure if we could expect price to go higher, to take previous week's high, mitigate this daily fair value gap, and then continue lower, if it would just continue lower at some point this week, or what is it that could happen, right? And overall, didn't get much of a response, to be completely honest, but I do believe that due to the XY having to cause a little bit of a retracement, we could see the euro dollar going higher for a bit, and this could be the start of it, as it has taken a pretty big amount of liquidity from down here. So I wanted to make a video because it's actually a really interesting price action that we got today, right? Really interesting price action where we see pretty much everything working out in our favor, right? We have liquidity, we have market shifts, we have multiple fair value gaps to trade entries on, both in the lower time frames and in the higher time frames. And yeah, just some lovely price action today. Sadly, I was not able to take advantage of it. Again, made a mistake on the bias for a part of it, but as I mentioned, it wasn't much of an issue. Like, it's not that all day I was looking for sells. I was mostly focused on the sells, but I was looking at what was happening on the buy side. But at no point did I get an actual entry that I would have liked to take advantage of, right? Or that I could have taken advantage of, better said, right? Because this one would have been a pretty fine entry, because the reaction in the lower time frame is really clean, in my opinion, really clean. We see immediate aggression after mitigating this, taking the couple of lows and market shifting, right? But price does pull away a lot and then come back down into that, which again could have been a fine entry, but it's just not something that I'm used to. And it is what it is, right? It is what it is. Pretty good day that I was not able to take advantage of, sadly. And there's nothing else to mention on this one. So I hope you enjoyed this video. Hope you had a nice session today, and I'll be seeing you until the next one.